A recent survey by Westpac into self-managed super funds found a large number of super trustees actually have a second super fund on the side. To look at this and other revelations from the survey, which gives a snapshot of a typical SMSF trustee, we have Sinclair Taylor, head of SMSF segment at Westpac. How are you, mate?
Good, thanks, Peter. How are you?
Good. I found this survey really interesting. So let's go through some of the hot shot points here. First of all, the number of people wanting to have direct investment in shares has gone up massively, 30% to 70%. That shock you?
Well, look, SMSF trustees have a very strong affinity with Australian shares. So about 44% of the overall assets are allocated to that. And that increase you're talking about from 30 to 70% is the number of people who are going to move out of cash. And when they move out of cash, they're going to put it into the ASX. So a big shot in the arm for the ASX over the next 12 months. Yeah,
and it makes me feel confident that, because we're seeing this also in America, it makes me feel confident that this run on the market, whether it's a cyclical bull market, inside a secular bear market, or whatever it might be, there seems as though there's a lot of interest in shares at the moment.
There certainly is, and that dollar amount is about $12.5 billion of asset value that will be injected into the ASX.
Probably good for Westpac's share price, the way they're chasing banks.
We're travelling okay at the moment.
Okay. Also, an interesting figure was that 19% want to go from cash into overseas shares.
Yeah, so the overseas shares are also really relevant, and once again, this speaks to diversification. The ASX, whilst it is the strong investment choice for many trustees, a lot of them are also looking for alternates, and going offshore with some of those better-known household names certainly has some attraction. It
also shows a degree of sophistication, doesn't it? Like, you know, when I was young, and you were probably still in nappies.
You had hair.
That's right. So in those days, we always said you have to be diversified, local and foreign. But of course, with the dollar so high, it's probably a good time to think about overseas shares, because at the very worst, if the dollar comes off the boil, you'll get a benefit there. But then there's also the fact that overseas shares are doing very well.
Yeah, look, share markets globally are performing reasonably well. So this does, as you say, speak to the sophistication of SMSF trustees to get their heads around global markets. And what we do find overwhelmingly with self-managed super fund trustees is that they are actively engaged in their superannuation. And that's a really positive thing.
Okay, I've got a number here. 44% still nervous and won't decrease their cash holdings. So that's another interesting statistic, that even though we're seeing this momentum into it, there's still a lot of nervous Nellies out there.
There are a lot of nervous Nellies. So SMSF trustees have built up a massive cash reserve, and some are going to move out of cash. So about 14% of people are going to move out of cash in the next 12 months. But you've got a big chunk of people who still want to hold on to cash, because it does represent safety and security. And those people want to stay in it because it will give them a return for the long term.
Now, Sinclair, does this mean that these are people who want to be cash only, or are they people who've got a certain cash balance and they're not going to reduce it?
Yeah, this is a certain cash balance, and we find that most SMSF trustees carry a portion of cash. Although the amount invested in cash is reasonably significant. So the ATO statistics suggest it's about $135 billion. So not a small amount of money held up inside SMSF accounts.
Yeah, but ironically, you might remember this. I'm sure it's right, but I can't remember where the figure came from. But a lot of self-managed super funds did well in the GFC because many of them were actually in cash, and some people argued that their accountants had tipped them into it. They actually didn't have an investment strategy, so they were in cash, and by fluke or by luck, they missed out on the big fall in the stock market.
Look, that certainly happens. I think a lot of trustees will move their money and roll over out of an industry or retail fund. It does land in cash into their bank account, and they might take some time to get into it. But once they do get into it, Australian shares certainly are the main winner, and it's the main asset class people like to invest within.
It could well be that also they were a bit suspicious that the market had gone up 5 years in a row with massive rises. Maybe they're just smart. Another interesting statistic or figure you've come up here, that a third of self-managed super fund trustees have another fund.
That's
like
right.
An industry fund or a financial institution fund.
Yeah, that's right. So, and what this suggests is not a one-stop shop, or you've got to have all your eggs in one basket. So about a third of SMSF trustees stay inside an APRA fund, and the reason that they do that is to access insurance benefits that they set up inside that other APRA environment. So out of an industry fund or retail or even a corporate fund, and they want to keep those insurances going. What we do find though is 86% of those trustees say that their SMSF is their preferred investment option, despite having 2 super funds on the go.
Yeah.
So once again, it does so that you can be diversified. You can still have some APRA money on the go, but your SMSF is often your main investment vehicle.
It's such important data for a financial institution, because obviously the game has changed over the last 10 years, and that's why they've got a person like you heading up self-managed super fund. It is an important growth area.
It is an important growth area.
But I guess the interesting question is, do you, if for example you had $1 million in your super fund and you decided to transfer 800 to a self-managed super fund, is there any sort of minimum balance where you might lose out on your insurance product, or is it?
No, I think you need to look at how much your annual premiums are, and most people will keep enough money in that fund to keep those insurance premiums going.
Okay, so another interesting figure here is 6 out of 10 not with a self-managed super fund. So you looked at people who currently are in a self-managed super fund, and so obviously in an industry fund or an other APRA type fund, but 62% are considering a self-managed super. Does that kind of figure surprise you? Not
really. I think this just really demonstrates the rise of self-managed super. So we survey around 1,000 affluent consumers. About 75% of them do have an SMSF already, but by definition the other 25% don't. And we find in that other 25% the 62% number where people are saying, I would really like to set one of these things up.
Did you ask the question whether people know at what amount of money they have in their fund they need to have before they think about self-managed super funds? Because a lot of people don't know. A lot of young people I know got maybe 100,000 and think, let's get into this, but it's really not enough to justify it in those early stages.
We found that about a third of those respondents who said they want to set one up weren't sure what to do next.
Yeah.
And this really speaks to the importance of getting good financial advice, doing some pre-education, doing a bit of reading, a bit of investor research. These trustees know what they're in for, but they just want someone to help them get going.
So what were the main reasons why people want to go in self-managed super funds?
Look, it remains control, flexibility and value for money. So these people want control, they want to make the investment decisions, and we found that there's been a big growth in the number of people saying they are making the right decisions themselves. So about 70% of respondents say that they are making better decisions themselves as opposed to relying on someone else, which says how engaged that they are.
It does, and I would have thought 10 years ago you wouldn't have got figures like that at all. It probably says a real lot about the quality of programs like the Switzer program. Sinclair, what do you reckon?
Possibly in terms of self-education.
Great education program, mate. All right, buddy, thanks for joining us on the program.
Thanks,
if people want to see this data, is it on your website?
Yeah, we're going to release this on their website, and we've got some interesting facts and figures up there which will really hopefully give some people some good tips.
Oh, without a doubt. No, it's some fantastic data. Thanks for joining us, mate.
Thanks, Peter.